Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. It greatly helps the channel, so thank you very much for your support. So, end of the week, quite the volatility. That's something we were expecting. There was this, let's go through immediately the big meat, the big issue, which is the non-farm payrolls have been revised, and they've been revised down dramatically. And basically, we went from maybe we're not going to have a rate cut in September to we're definitely going to have a rate cut in September. And the reason why I laughed at this is actually quite simple. For the people who've been following this channel for any meaningful time period, I've discussed about the three economies so many times, and this is good because this presents an example of a theoretical, you can call it analysis, assumption on my behalf, but basically I can see three economies, okay, in the United States, but not just the United States, in general. Number one is the real economy, which has been garbage for most people. And this is why they vote the way they vote. So you see, the media tries to tell you that things are much better than they are, but then you go to how people voted, and you see that the number one reason that they voted for Trump was the economy and inflation, and number two was inflation, which is linked to the economy. So basically, the real people are telling you, no, this is complete garbage, this is terrible, while other people are telling you it's great. So that's economy number one, the real one. Then you have the real economy. Then the second one is real economy, but with government reporting. Meaning, the reports are about the real economy. Some of them are true, most of them are false, and heavily cooked, regardless of administrations. So, for example, when Biden was president, we had this incredible job report after job report after job report, and then all of a sudden, oh, by the way, actually 800K jobs didn't exist. Sorry about that. They were all revised down. And then I told you this 1,000 times. You check the report a little bit in detail and you see, oh, full-time jobs are dropping and part-time jobs are increasing. That's not good. A full-time job is much better than a part-time job, you see, but the headlines don't care about that part. Also, with Biden, you had massive hires of government jobs, which by definition are not productive. And so I was telling you, yeah, the job report is garbage. It's heavily cooked. And when Trump was elected, I said, they're playing the same game. A job report comes out, oh, better than expected, revision. Oh, it's better than expected, revision. There's no difference. It's the same methodology. Now that person has been fired. I'm not sure if they were, one thing is very simple. Either the reports are being manipulated to look a certain way, which wouldn't surprise me at all, or the people behind it are completely incompetent. That's it. Those are your two options. And now it's up to you at home to make your own decision of which one you think is the more likely one. Right? That's it. That's basically it. And then you have the economy number three is the financial assets economy. The stock market, the real estate market overall, I'm not talking about just the US, but it's the stock market, the crypto market, gold, stocks, those kind of things that do very, very well. And why do they do very, very well? Because the most important thing for that market is liquidity. Budget deficits, rate cuts, QEs, all of the likes that we've been doing for decades is very helpful for that line of business. So, the financial economy does very, very well. So when people say, oh, but this has been great because the stock market is at all-time highs, I'm going to tell you a little secret. Even if the other person had won, I'm pretty sure the stock market would have hit all-time highs in any case. So what's the big difference? The big difference is the tax bill and the tariffs with the trade deals are supposed to change this for the real economy, or at least improve it. But what is the problem with that? I'll tell you. The problem is the audience believes, for the most part, on the reported media on the economics of a country. So basically, these job reports, which I've told you 100 times, I don't see why people pay any attention to this. Why do I pay attention to it? I pay attention to it because I know the market pays attention to it. I've told you this before. The headline number is what matters, despite me knowing that if you go through the report is garbage. I know it, you know it, because you watch this video, but the market doesn't care. And unfortunately, I cannot position for what I know. I can position for what I know that most people will think, because that's how the market works. The market is not my opinion. The market is millions of people moving in a certain way. So if I think they believe a certain thing, then I position for that, not for what I actually know underneath. So that's the big difference. I've been talking about this forever. I've talked about it again, because this time you're seeing in real time a very good example of what I've been saying for a long time. It's all fugazi. Now the issue is, in a normal world, Trump, Bessent, and the others would come out and say, look guys, a lot of damage has been done to this country. A lot of damage done over decades. We are not going to solve this in 3 months. There's going to be some pain for like 6, 7, 8 months, a year maybe. But then we should start to see the fruits of our efforts. You see, the problem with this is that if they do that, the media will start comparing the real results at the moment with the fake results from the Biden era, or from the Bush era, or from the Obama era, or from behind. It doesn't matter. It's all the same. It's not about Republican or Democrat. They will just make that comparison and say, hey, things were much better under Biden and now they're much worse with Trump. Because it's a bit like, let's say we have a party in a big club and I max out the credit card and we get completely wasted. Next day, someone else comes and they have to deal with your hangover and they have to deal with paying your credit card debt. The media will say, oh, but yesterday evening we were doing much better. We were all partying, we were all having a lot of fun, we were all spending a lot of money, it was great. And now this guy is coming here to pay the bill and to deal with the hangover. This is not great. You see, but one is the cause of the other. But the public does not understand because they get bombarded with this media reporting non-stop. And if their life starts to turn sour, they start to believe what they're hearing. That's the problem. Repetition really does work. So this is where we are today. For the real economy, it will take much longer to be visible. What have I been saying? I'm probably the only channel that has said this before. Will the trade deals be successful? Will the tax bill be successful, etc.? What did I say? Give it 12, 18, even 24 months to see. It's impossible to say right now. I cannot come here and guarantee you something positive or guaranteeing you something negative. It's impossible to tell. You have to wait and see. Why? Because not even the smartest of us can see all the unintended consequences, being that positive or negative. We can't tell. So what we're playing here is guessing. So for the real economy is guessing. For the financial economy, which is how we can invest our money to basically try to create financial independence so we don't have to worry about these things, is all linked to liquidity. What's going to be the effect of this job report? Probably rate cuts and money printing. More than one rate cut. Yes, The Fed is late. It's been late for a long time. They should have been continuing to cut in tandem with the European Union and the ECB. So basically, the Fed should be at maybe 275 bips, 2.75%. It's at 4.5. So it's very, very behind. So now you're going to see pain for longer, because this is and I've said this before, why is this so important? Because it's the only way. The debt is too high, both private and public. Public meaning government, municipalities, states, all of that. It's too high. So your only hope is to grow out of it. And you cannot really grow out of it if your mortgage is 7%. That's it. It's really that simple. So, but the Fed has been hiding behind this reporting of jobs, being much stronger than expected. I wouldn't be surprised if in a couple of weeks CPI comes much softer than expected, much better than expected. Now you're going to have inflation on the jobs. Now you can cut, right? What's the problem now? He's going to cut and say, see, I told you, it's all a game. It's very sad to see, because this affects real people's lives, right? It's not just, it's two men, one against the other, but at the end, it impacts a lot of people's lives. So when it comes to risk assets, in my view, okay, let's assume that the economy is much worse than people thought. Things are getting much more negatively impacted. What's going to be the solution here? More money printing. That's it. More rate cuts. So I've told you this before. Liquidity is created in two ways. Budget deficits on the treasury side. Central banks. Sometimes both of them contribute. Sometimes one pulls more than the other, which has been the latest case. That's how you can keep rates high and liquidity keeps on pumping. It's the same thing. There's been an update, by the way, on the global M2 chart, and it seems to have peaked, which would put the peak of Bitcoin around mid-September 2025 or so, mid to third week of September. Look, I've told you, I think we're going to have a big correction in Bitcoin around mid-September, give plus minus a week. So that chart seems to be suggesting that that's going to happen. Basically, we should pump into that period, and then we should have a sell-off. Then the big question will be, okay, is this the end? Or is this the end of the first run? We're going to have a correction, and then we move into 2026, because the cycle has been pretty much shifted to the right. Hard to say. Impossible to say. The charts will tell you ahead of time which one's going to be. I don't know. I would give it, I would say 50-50. In 2 months, so in September, in middle of September, in the month and a half or so, you'll be able to see how that global M2 looks like, and now you can make an educated guess, which is basically what we can do here. And now let me go through something. Stocks have sold off, obviously. Bonds have spiked higher. Dollar went down. So basically, we are already seeing. What are you seeing? What is the reaction of today? Very important. Yields go down, good for liquidity. Dollar goes down, good for liquidity. Oil goes down, good for liquidity. So the balancing act of this is liquidity is going up again. And the funny part also is that this sell-off has already prompted people to go crazy. Oh, this has been the top. No more for the next 12 months. Finished. It's finished. No more. It's finished. That's it. That's not the sign of euphoria. Euphoria would be, so what you wouldn't like to see? We wouldn't like to see this sell-off happening and people being super relaxed. That's not good. That's called complacency. That's called the majority of the market believes that we're just gonna go right up. after this. See what I mean? So the fact that people are so concerned is a good sign to me. I made few videos in the past weeks saying, look guys, we can still go to 111, 112K, retest the previous all-time highs, and then go up again. Perfectly possible, perfectly bullish. Nothing special. Of course, people are already, pissing their pants and going crazy with the sell-off. Okay, I guess so. The issue is you have to start thinking that a lot of these jobs data, first of all, is backwards looking. So you're looking into the rear view, not the windshield. That's number one. Number two, think what's going to be the solution, the response. And then to me, it becomes clear. I'm used to these corrections within crypto. I mean, what is it? 3% down, 4%? I don't even look at it. It's so irrelevant. Now, I have to say something because this was hilarious. So Crypto Banter, obviously, Ran Nuna, makes a video declaring the correction to be over yesterday. He made the video yesterday. Correction is over, it's finished, we're ready to go up, great. Today makes another video, how to prepare for the correction in August. Same guy that said yesterday that the correction was finished, today is teaching you, obviously, hey, if you buy his stuff, you're going to be super well positioned, to basically prepare for the correction that it is missed 24 hours ago. It's like seeing someone bipolar. It's like double personality. It's like the movie Split, right? It's like complete different personalities talking about the same. I mean, it's not even 24 hours apart. I mean, this is so bad. But this is going to go like this. And then if we actually, touch 111, 112K on Bitcoin and we go up, it's going to say, I never talked about any correction. What correction? Never said anything about it. It's always like this. That will never change. But I've told you this before. Recently, going to 112K was very bullish. And I told you, if we go to 112K, it's going to be very bearish. And then the same thing, and now if I tell you, hey, would you like to go to 125K? All of you would say, oh my God, that would be very bullish. And I'm going to tell you, in a few weeks/months, going to 125K is going to feel very bearish. I'm telling you right now. The fundamentals are better than ever. SEC, Treasury, tokenization, starting to be global acceptance of crypto, not just the US. So it's actually spreading around. More liquidity coming. All the fundamentals are great, but people cannot see it because the chart is red. That's it. And they already forgot about the pump to 125. They completely forgot about it. This is the world we live in now. It's a weak memory, and that's over. So now there's basically no excuse for the Fed not to cut rates, which I think now that they will. And they will be able to save face by saying, look, I mean, we work with the reports we get, right? If the reports are all wrong, what do you want me to do? Like, that's not my job. I'm not a reporting. I look at what they prepare and I make my assessment. But if what they prepare is garbage, what do you want me to do? So now he has the exit, the safe face kind of exit. Reality is he should be cutting in tangent with the European Union. He would have done it, in my personal opinion, if the right candidate for him had won the election. That's it. Summary. Real economy, still garbage. Will the changes enacted in this year prove to be successful or not? Give it 12 to 24 months. Let's say 12 to 18 months at least. Okay, give that time, because this is not like. And I know Trump can sell whatever he wants to sell. The reality is a lot of damage has been done over the years. Correcting it is difficult and it takes time. So real economy, 12 to 24 months. Then we'll start seeing. Number two, financial economy. Still great. We were priced for perfection again. So guess what? We are now pricing imperfection. And it's bumpy. And you see red. And we are back to, my God, we collapsed to 2 weeks ago prices. That's it. What a collapse. We had all-time high, breakout, retest of all-time high, going up again. I've seen that a lot of times before. But I get it. People just, they need to learn the hard way. Let's see if this time is the time they get it. So don't forget, you have the real economy, you have the reported economy. Some reports are fairly good. Some of them are completely garbage. The job one is probably the worst. It's anybody's guess. I mean, but it's not just the reporting, it's the analysis that it's not made about the report. Like, for example, they can we reduced 10,000 full-time jobs and we got 12,000 part-time jobs. So this is great. No. If anyone in my audience has worked a part-time job or a full-time job, they know exactly the difference between one and the other. And apart from this, look, if we do follow liquidity, we should be going higher in the next few weeks. We are now resetting the sentiment a little bit. Leverage longs, people that got excited, are getting punished. That's part of the game. And then I've already said the big correction in Bitcoin, I see it around mid-September, give or take, plus minus a week, because these things are not scientific. But don't forget, usually altcoins go further for a few more weeks. I mean, historically, Bitcoin would top, followed by Ethereum topping 28 days later, and then alts topping about 7 to 10 days after Ethereum. Let's see. And by the way, I'm not talking about the ultimate top. I'm talking about potentially a local top. It will be hard to say. It will highly depend on, we are in that phase of the cycle. You have to see it almost weekly by weekly. So week by week. So, but as long as we don't have euphoria, as long as liquidity keeps going up, I don't see why the cycle should stop. And with that, thank you very much for support, guys. Don't forget to enjoy also the weekend. Try to tune out a little bit. If you do enjoy the content, drop that like and subscribe. If not, please feel free to go to the comment section and destroy me. I also welcome that. Thank you very much, and I'll catch you in the next one.